Good morning, good morning, good morning. Welcome to today's morning blast with myself and the awesome Mr. Michael Brown. Whilst he joins us, let me read out the legals. So, as usual, nothing discussed on this space session constitutes trading and investment advice or infers any kind of endorsement by PIQ Global Limited, known as PIQ or PIQ Suite, or indeed the hosts, which, as you already know, because I've just told you, is Mr. Michael Brown and myself, Mr. Ryan Paisley. Good morning, my friend.
Good morning, Ryan. Good morning, everyone.
Good morning. What was that?
That's me celebrating that the UK economy grew by 0.1% in the 3 months to December.
Love it. Love it. Love it.
Rachel Reeves has saved us all.
Oh God, I thought we were going to get away without doing any sound effects on this show, but now if you've opened up that can of worms,
Oh no.
Yeah, see, look, I've never been one to I've never ever been a believer in this whole like government's cooking the data and stuff. But if I was ever going to say it,
I mean, to be fair, whether they're cooking the data or not, the only reason the economy did grow was because government spending rose by 0.9% over that period.
yeah,
So,
I'll
private
take out
consumption was
that.
flat, capital formation was down by 1%. So, we're still not out of the woods. Let's put it that way.
No, definitely not. Definitely not. Right, what else has been going on then?
Yeah, anyway, we'll get onto that properly momentarily because there is plenty else to discuss. Good morning, everybody. Of course, all eyes were on the US inflation figures yesterday, which did come in hotter than expected across the board. And credit goes to young Zach, if he's on the call, for flagging this possibility on Tuesday morning. Headline CPI rose by 0.5% on a monthly basis in January, which is the fastest such increase since August of 2023, while core prices rose by 0.4%, which is also the highest rate in about 18 months. On an annual basis, headline inflation rose by 3%, which was above the prior 2.9% and also an 18-month high, while core prices rose by 3.3%, well above the 3.1% that market participants had been expecting. And naturally, this caused quite a significant hawkish reaction across the board. There is nothing in that data that is screaming that the economy needs a rate cut at this moment in time. And everything in that data points to the Fed remaining on hold for the foreseeable future. Of course, we have gone through a couple of days worth of testimony from Fed Chair Powell, where he has stressed that that the committee are in no hurry to deliver any rate cuts, and really that the data that we've had, obviously with the solid January jobs report and now the hotter than expected January inflation data, really backs up his point. To be completely honest with you, the Fed can afford to be patient. The economy is not making the progress back towards 2% that they want to see, and as a result of that, I think the Fed's default position now is to sit on hold unless and until they see data or the risks to the dual mandate beginning to change. And the market has priced in a much more hawkish outlook as a result. We now have just one 25 basis point cut. The December meeting, that compares to around 35 basis points of cuts, with the next cut being priced for September before the CPI data. In terms of market moves elsewhere, of course, we saw losses across the Treasury curve, with yields between 2 and 30 years up by about 10 basis points on the day, although we have paired some of those losses overnight. What was interesting, though, was actually that although we saw a hawkish reaction elsewhere, with equity futures dropping by around about 1% and the dollar rallying as high as 108.50 and gaining probably about 70 or 80 points against most G10 peers, we did see the moves in the equity space and in the foreign exchange space reverse as the day progressed, with the dollar index actually ending the day marginally in the red. This came largely as a result of two things. Firstly, we have to, all of this, we have to make a journey over into Trump world, so we may as well do that now. The first is that the reciprocal tariffs seemed to be a little bit like the phase one US-China trade deal, where that was 90% done for about a year. The reciprocal tariffs that we keep hearing about are always coming tomorrow. Originally, it was meant to
Yeah,
be Monday, then it was Tuesday. Then we heard yesterday that actually they're still a work in progress and maybe they'll come today, which is Thursday. And of course, every time the can gets kicked down the road, the market is becoming a little bit more optimistic that perhaps these aren't coming
yeah.
at all, or perhaps indeed that when they do come, they will not be quite as severe as had been feared. And there are reports that the EU have been sort of trying to lobby Trump in terms of reaching some sort of an agreement. The other thing that market participants latched onto yesterday was this telephone call between President Trump and Russian President Putin. On this call, apparently they were discussing a whole host of different things, including which the call lasted for about an hour and a half, incidentally, including the dollar, energy prices, and AI. The big headline, though, is of course the discussions that they had around the war in Ukraine. Apparently, Trump and Putin have agreed to immediately start negotiations to end that war. We've also had some very punchy rhetoric from the US Defense Secretary, aka Fox News host Pete Hegseth, who has been talking about how it's unrealistic for Ukraine to go back to its pre-2014 borders, and also how if there is some sort of peace deal and that needs enforcing, it will not be US troops on the ground enforcing it. Perhaps most importantly among all of this, which is quite frankly ridiculous,
Yeah.
is that Zelensky, who is actually the bloke running Ukraine, was only told about all of this after the event, and thus far doesn't seem to have much of a say in what these negotiations may actually come to in terms of a conclusion. And you would also
Yes.
imagine that European defence ministers are pretty damn annoyed with it as well.
Well, that the great timing on that, because I was just about to intersect and say that Germany's defense minister has already been on the wires saying, it's an abomination that Ukraine and Europe weren't involved in this talks, and the US should not have given Russia any concessions before negotiations.
Yeah.
So yeah, an interesting one. Obviously Trump's just doing it because he wants to be seen as the guy that kind of solves the problem. But you do need to get everyone around the table for this because otherwise it won't work. I suppose there's the argument to be made that Trump is doing this because if he comes up with a deal with Putin, he can kind of then sell it to Ukraine and say, well, look, you're getting all of your kind of support via US dollars and via us and via our arms shipments. Unless you follow through on what Trump's just decided, we pull the plug on the backing. So it's going to be a difficult one to kind of fit, but yeah, it'd be an interesting one to follow.
Yes, and that one is certainly going to rumble on. And of course, do bear in mind, in the context of all of this, Vice President JD Vance is due to be meeting Ukrainian President Zelensky at the Munich Security Conference tomorrow, I believe. So I would
Yeah,
quite like to be a fly on the wall in that meeting.
yeah,
In any case, moving on from that momentarily, a few other bits and bobs from yesterday, sticking with the political backdrop in the United States. House Republicans put forward their budget bill yesterday. They have proposed a $4 trillion increase in the debt limit. Importantly, this context comes from Jake Sherman of Politico, that is less than the amount. So at the moment, you've got two things going on. In terms of big fiscal legislation, you've got the budget bill, and you've also got legislators who are writing Trump's tax plans into a bill. And the guys who are writing Trump's tax plans, they need or they want an increase in the debt limit of well over $4 trillion in order to fully enact the agenda that Trump wants to put forward on that front. So it will be interesting to see whether you see a bigger increase in the debt limit or whether you see those plans watered down. And obviously, that's something important to keep on the radar. Lastly, in terms of the US political situation, I should have covered this when we were talking about CPI, but with absolutely perfect timing yesterday, half an hour before those really hot inflation numbers were crossing newswires, Trump was out on Truth Social again, calling for interest rates to be lowered and saying that lower interest rates would go hand in hand with his upcoming tariff plans. Of course, Jay Powell, giving his testimony to the House yesterday, was not going to make any comment on that whatsoever, although did repeat that he would not resign if he was asked to do so by Trump. A couple of other bits and bobs just to get through very briefly. In terms of the United States, we were talking about how the labour market is solid. A few headlines doing the round in terms of layoffs yesterday. JP Morgan Chase, they have apparently begun to conduct their annual round of layoffs, and perhaps even more significantly than that, Chevron, they are looking to get rid of about a fifth of their global workforce, which amounts to as many as 8,000 employees, and that's part of a larger cost-cutting initiative at the firm. Do just bear this in mind, because obviously you're also going to have much later in the year, a big drag from falling government payrolls if all of these Musk/Trump plans to slash the federal workforce come to fruition. So do just keep that one in mind. And then last two things from me. Firstly, Bloomberg reporting yesterday that some EU nations want to relax their gas storage targets. Now, these targets currently mandate that European gas storage should be 90% full by the 1st of November this year in order for the EU to have enough gas in its tanks to get through
Yeah,
next winter. A lot of countries within the EU are getting quite worried about meeting these targets because basically it's becoming bloody expensive to do so.
yeah.
Nat gas prices in the EU trade at roughly 2-year highs, and if our good friend George is listening this morning, he knows more about that than anyone. And that is and currently storage sites are around about 48% full in Europe, which is the lowest level for this time of year in 3 years. So not only have you got more expense in terms of filling those tanks because prices have risen, you've also got a lot more gas than usual that you need to buy in order to get to that level that the EU have mandated. And lastly, just to wrap up, a couple of comments. Oh,
Sorry.
go on.
Just quickly on that, just two things to add on this, the nat gas LNG kind of story. One is that we're at the price now where LNG import prices are such that it makes coal-fired plants more effective, more cost efficient, should I say? So we're starting to see those reopening up again. That was, I can't remember what agency put that out, but that was yesterday. But also on something to bear in mind in terms of the storage numbers that we're going to keep saying. I did mention this a few weeks ago, but people just got to be a bit mindful because the scary headline is lowest storage levels at this time of year for 3 or 5 years, but they have been abnormally high for the last 3 to 4 years at this point.
Yes.
So if you go back longer than that, that is not such a scary chart. But obviously, you don't sell headlines with unscary charts, so it's not as bad as perhaps people are making it out to be. But yes, it is very expensive, which is why people are being forced to maybe consider reopening coal plants and stuff. But also, one thing we need to remember as well, it sounds obvious, but you've got to say these things out loud sometimes. It's not like they're not importing gas still. It's not like at the start of winter they stop importing gas and they rely purely on storage. That storage is constantly being topped up.
Yes, that is very true. Very good context. And lastly, just from me, a couple of remarks from Bank of England policymakers over the last 24 hours. External MPC member Megan Green, she was saying yesterday that it's appropriate for the bank to continue with its gradual approach, given that the persistence of inflation is fading relatively slowly. And then this morning, Reuters had an interview with Chief Economist Hugh Pill. He was a little bit more hawkish, actually, saying that he is cautious about the idea of further rate cuts, given that underlying price pressures remain. And if you're short cable, then that could be a bit of a tough pill to swallow, I imagine.
Oh, I was waiting. I was wondering how you were going to fit that one in. But it was that final line. Yeah, I was
Do
like,
you know
how's he
what?
going to fit in?
Do you know what really
Go on.
pleases me? It was actually my boss that made that pun this morning, and his immediate reaction was, "What the fuck have you turned me into?"
Yeah, no, I agree. He speaks for many of us. Yeah, it's
If you're
the
listening,
amount of
Wesley,
times
good morning.
the amount of times I think of a pun and I just kind of start cursing you under my breath. Um, anyway, thank you for that. So some brief headlines via our good friend Zach, who's listening in, who obviously puts together the overnight news roundup for us. Check that out on our Substack. It's also been tweeted just now. Also, before I forget, big shout out to Cam, who's also listening in, who will be putting out the crypto blast very shortly. But yes, just some headlines that I've chosen from the deeper dive on the overnight news roundup. So firstly, US President Trump is set to sign some executive orders today at 1 o'clock Eastern time, which for those of us in proper time, not this one, he's made up time zones, that's 6 o'clock tonight GMT. The Senate voted largely along party lines to confirm Tulsi Gabbard as Director of National Intelligence after she overcame skepticism from Republicans about whether she was the right person for the post. Just on this, Bernie Sanders rightfully getting a lot of stick because Tulsi Gabbard actually kind of resigned from her post when she was, quite senior in the Democratic Party for how they were treating Bernie Sanders. And you would have thought that, when it came to voting this time around, he might have shown some loyalty, but no, he voted against her. So bit of one in your eye. But anyway, a federal judge has allowed the Trump administration to move forward with its buyout offer that encouraged federal workers to voluntarily resign, rejecting an attempt by labor unions to pause a program meant to shrink the government workforce. I believe the last headline I've seen on this, if I recall correctly, so forgive me if I'm wrong, or there's been one since, was that 75,000 government employees have taken up this offer to leave early. Japan's annual wholesale inflation jumped to a
Sorry,
seven-month high.
I was just going to say on that, just going back to briefly what we were discussing earlier in terms of payrolls. Yes, the number is huge, to be honest, in terms of 75,000 people signing up for it. The way that the package is structured, if it's legal, because there's a whole load of court cases going on around it, is that these people will still be, well, firstly, they will still be employed by the federal government until September, October, I believe it is.
Yeah.
And secondly, they are allowed to go and get another job in that period and effectively be employed twice in two places.
Yeah.
So the negative impact on payrolls is not as simple as, oh shit, let's just take 75,000 off whatever the February number might be.
Yeah, no, exactly. As if we needed more reasons to make the jobs data like less reliable.
Oh, well, it's all made up anyway, apparently. So
yeah, exactly. Japan's annual wholesale inflation jumped to a 7-month high of 4.2% in January and accelerated for the 5th straight month, highlighting persistent price pressures and reinforcing market bets of another interest rate hike this year. Keeping on this, most economists expect the BOJ to raise short-term interest rates again in the latter half of the year. A monthly survey of economists conducted by private think tank JCER showed, that was by Reuters. Barclays says strong US inflation data and the prospect of a deal to end the war in Ukraine have dented the yen's appeal. That's after hawkish comments from Bank of Japan, official. An upbeat wage data last week boosted the currency to its strongest level this year. Moving up to China, China is resuming issuance of 30-year government bonds in Hong Kong. That's after a long hiatus, a move that will help set a benchmark for offshore issuers joining a boom in yuan borrowing. Chinese demand for yield is showing few signs of abating, even as risk sentiment has started to recover, as shown by a buying frenzy for real estate investments. That's according to Bloomberg. Chinese construction of coal-fired plants has reached the highest in a decade. That's according to the FT. It's one for Greta. China's semiconductor equipment. So is she still about? I've not heard from her in ages. So not that she calls me personally. I've got
probably crying
ghosted
somewhere.
by Greta. China's semiconductor equipment purchases are expected to decline 6% to 38 billion with a B dollars in 2025 after 3 years of growth. That's according to the DigiTimes. What else we got here? Cable, well, more importantly, sterling, should I say. GBP strengthened after the UK economy unexpectedly grew by 0.1% in the fourth quarter. GDP figure marks an increase on the zero growth in the quarter that ended in September, but is still consistent with an economy that is struggling to gain momentum. And obviously, Michael said much more about that just now.
Praise be to Rachel Reeves.
Oh, don't, because she will think this is all her. That's the problem.
Oh, he's
they think it's them that's done it. Hello, I'm here.
Oh yeah, you're back. You're back. Sorry, I think that was my end. Yeah, it's clearly not them that's done it.
No, but this is the problem, right? That she's in danger of thinking it is her, so she'll just carry on doing what she's doing, which is not.
Oh, I see. Sorry, anyway. I missed that important bit.
Yeah. Britain's housing market slowed noticeably in January as the house price growth and buyer demand cooled. That's according to a RICS survey, who still expect activity to pick up in the year ahead. Moving, well, very far away to Australia, top executives from Australia's 2.6 trillion with a T dollars pensions industry are heading to Washington this month to meet senior officials from President Trump's administration to discuss investment opportunities in the US. That's according to Bloomberg. A couple of geopolitical headlines now. So Chinese officials in recent weeks have floated a proposal to Trump's team through intermediaries to hold a summit between Trump and Putin to facilitate peacekeeping efforts and after an eventual truce. Obviously, Michael has just mentioned before that it's already been said by US officials that that US troops will not be on the ground, but things change. The offer is being met with skepticism in the US and Europe, given the deepening ties between Russia and China. We've mentioned about the German defense minister is not happy about Trump going to straight to Putin, so I'll skip that. AFP quotes the Palestinian sources close to talks as saying that progress has been made in efforts to end the crisis related to the continuation of the ceasefire agreement in Gaza. That's according to Sky News Arabia, citing AFP. Equity Space, now a few headlines from there. US government has reportedly given 3 proposals to TSMC. Number 1 is TSMC build an advanced packaging facility in the US. Number 2, under a joint venture, TSMC, along with several major companies, would invest in Intel's standalone foundry business and facilitate technology transfer from TSMC. And number 3, Intel would assume future packaging contracts from US customers that TSMC secured, leveraging Intel's advanced packaging capabilities. Now, I think mainly the underlying factor on this is Intel got given an absolute shit ton of money from the government to start building these foundries and kind of do more work in the US. But Intel haven't got the clients that other people have. So I think maybe they're just trying to see if they can make the most out of the US government are trying to make the most out of their investment into Intel by kind of forcing the hand of TSMC here. So one to watch on that on the chip front. Elon Musk will withdraw his bid against OpenAI if the board is prepared to preserve the charity's mission, according to his lawyers in a court filing. Musk has also asked OpenAI to remove the for sale sign from its assets by halting its conversion. Elon Musk, sticking with him, Twitter has agreed, or X has agreed to pay $10 million with an M dollars to settle a lawsuit that Donald Trump brought against the company and its former chief executive after the president was deplatformed. Wall Street banks are close to selling $3 billion with a B dollars worth of loans back in Elon Musk's takeover of Twitter, offloading another mammoth portion of debt deal that has lingered on their balance sheets for more than 2 years. Moving to AI now. Chinese businesses rush to try DeepSeek AI at unprecedented scales. 8 automakers, including BYD, at least 9 financial securities companies, 3 state-owned communications operators, and smartphone brand Honor are among the many tapping up DeepSeek. Alibaba co-founder has confirmed that Alibaba is cooperating with Apple on mobile services. Moving back to the UK, Barclays reported a 24% rise in annual pre-tax profit, slightly above expectations as its investment bank reported strong performance for 2024 and slower than expected interest rate cuts sustained income in domestic lending businesses. Sticking with banking names, Commerce Bank plans to lay off around 9% of its workers in a bid to boost returns and convince investors of its standalone prospects as it fends off an approach from Italy's Unicredit. And finally, from me, Foxconn has said it will consider taking a stake in Nissan for cooperation. That's going to Reuters. And that's it for me. Over to you in the studio.
And that, of course, comes after Nissan and Honda put the brakes on their potential merger talks. They are now over.
Exactly.
Cool. In terms of today, then, obviously, we've already covered the UK GDP figures. The rest of the day is full of tier 2 data, to be completely honest with you. At 10 o'clock this morning, we have some industrial production stats out of the Eurozone. Production seen falling by 0.6% on a month-on-month basis in December. That will be compared to the 0.2% rise that we saw in November, although the data is, of course, incredibly stale at this moment in time. Into the North American session this afternoon, we have the weekly US jobless claims figures due at 1:30. Initial claims seen rising by 216,000 in the week to the 8th of February, down from 219 in the prior print. Continuing claims expected as near as makes no difference unchanged at 1.885 million. Of course, neither of those prints pertain to the February non-farm payrolls survey week. Also at 1:30 this afternoon, we have the latest PPI figures out of the United States. Producer prices seen rising 3.3% on an annual basis in January. That would be unchanged from the print that we saw in December. And of course, the PPI metric is an important input into the models that are used to forecast the PCE figures, which is, of course, the Fed's preferred inflation metric. Other things to keep an eye on today, we are due to hear from the Fed's Goolsby in about 6 minutes' time. It's been 12 hours since he last spoke, so he's overdue another appearance. We're also set to hear from the ECB's Nagel and Cipollone as we move through the remainder of the day. Of course, participants will also be keeping an eye out for any news on the whole idea of reciprocal tariffs, whether we do indeed have an announcement on that today, or whether it is punted once more. As I think you alluded to, Ryan, Trump is due to sign a whole host of executive orders at 6 o'clock this evening, London time. So we will expect some comments from him then. Also at 6 o'clock this evening, London time, we have 30 years supply due from the United States, a $25 billion auction happening then. We did have a 10-year sale yesterday, which was a little bit soft, tailing the when issued yield by 0.9 basis points. And last but by no means least, we do have some earnings figures due today. Before the market open, we hear from John Deere, and then after the market close, we hear from the likes of Coinbase, Airbnb, and Palo Alto Networks. But of course, earnings season has now started to slow in terms of the big names, with the next major event coming on the 26th of Feb when we hear from Nvidia. And that is your lot from me this morning.
Awesome. Thank you very much for that, my dear friend, Mr. Michael Brown. Listeners, thank you as always for tuning in, especially our regular ones. And we will see you tomorrow for more information on what's moving markets. See you later.
We will indeed. Bye-bye.